I'm tired of feeling so off all the time. Markets are uneasy, narratives are shifting faster than data can keep up, and we can all sense it. The fear and greed index is sitting at extreme fear. Job market is swinging unpredictably. January was good. February was so bad it did a complete 180. And inflation seems contained, but not quite. And of course, there's a war leading to all of this volatility and the rise in price. But it's not just the problem of one event. It is a broader scheme of things that's happening and causing to the systemic shift. To understand this, let's break down how the economy gets impacted. There are a few shock levels that we can think about. How we always understood the economy is by demand and supply. And they're linked, right? So as long as there's a good balance between the demand and supply, things should be fine. But what if one of them gets a shock? Let's talk about the demand first. It's easier to understand. So the demand goes down, which means that the consumer spendings are less, which means you and I are not going to go out in shops and buy the things that we want to buy. We'll only buy what we need, mandatorily, right? So that means that the businesses their growth will slow down. So they'll spend less on salaries, on hiring and stuff like that, which means that we will not have more to spend on, which means that the demand will keep on going down. So that becomes a circular loop. The second one is the supply shock, which is a little bit more dangerous. Supply shock means that we are not getting enough of the things that we need. We've seen that in COVID, whenever there's any geopolitical issue that happens. Right now it's happening with the war again, when the Strait of Hormuz is being blocked and the oil supply has reduced globally. The third is the monetary policies. Whenever there is a demand or a supply shock, the government, the central banks, they take some action to manage the situation, manage the instability and volatility. See, but the monetary policies are usually reactive. It's that the central bodies are trying to do something after the event has taken place, which means that the businesses now are already cautious and normal people like us is already seeing the impact. They're also walking a very tightrope. Now, if they overcorrect on something, there is a chance that there might lead to a recession risk. If they undercorrect something, then the inflation will keep on rising. So it's a tricky situation that they are managing. All of this is fine and good. But what happens when the nature of who's supplying and who's consuming is changing? That's the fourth shock, the human capital shock. And this is the least understood. This is the one that we underestimated completely. And we have been trying so hard and so much to keep up with it. Yes, I'm talking about AI. AI has been changing the landscape of jobs in front of our own eyes so much and so fast. See, tech disruptions happen. Tech disruptions have happened in past as well, during Industrial Revolution, during the Agricultural Revolution, but it was mostly changing the manual labor. It was mostly compressing some of the cognitive tasks. But now AI is changing the white collar jobs. It's the people that go into offices and they do things on their computers, and most of the work is driven by intellect. That is shifting quite a lot. So you'll see, in the job market, you see there is disappearance in the entry-level jobs, there's wage compression, there is reduced need for a lot of analysis and the decision-making that was needed before. That's the fourth shock. And while for demand and supply shock, there were policy frameworks that can help, those policy frameworks are non-existent right now. We are at a historic intersection where the friction of geopolitics is meeting the disruptions of technology, forcing all the four shocks that we talked about to collide. The best move right now is to stay informed and keep building your adaptive skills. We post educational videos like this on our channel, so subscribe and I'll see you in the next one.